Hello, this is Dean Malone with Compass FX. This training video is about trading the bank trader strategy using a swing trade style. There are four determining factors to trade the bank trader strategy: technical market bias, and then different trade styles. Again, we're going to focus in on the swing trade style. With a swing trade style, you're going to look to trade a continuation or reversal of the previous day's trend through the trading sessions of the current day. This trade style can be monitored from a 15-minute to 1-hour chart and may take a few hours to complete. To swing trade a trend continuation, we want to identify the trend direction from the previous day. We're going to wait for a move away from the open. We're going to look for a swing high or a swing low. In a downtrend, look for a swing high to confirm a downtrend. The swing high will most likely be lower than the previous swing high. In an uptrend, look for a swing low to confirm an uptrend. This swing low should be higher than the previous swing low. In some cases, the prevailing trend will continue at the open from the previous day. Look for a retest of the open of the day or other level. A retest oftentimes occurs as a test if the market is truly going to move in the direction of the trend. If the open of the day or level holds, wait for a continuation signal. Look for a lower close in a downtrend. Look for a higher close in an uptrend as a continuation signal. If the open of the day or level breaks in the trend direction, then if you're in a downtrend, trade to yesterday's low and then on to targets low target number 1, low target number 2, or low target number 3. In an uptrend, trade to yesterday's high and then on to targets high target number 1, target number 3. This is an example of a swing trade in a trend continuation. The market moves away from the open and actually makes a high of the day. In this case, what we see here is a swing high, but this swing high is lower than the previous swing high over here. The market then falls back over and retests the open of the day. On the break of the open of the day, we can look to enter a short trade as the market moves on down to yesterday's low. On the break of yesterday's low, then we can target low target number 1 or low target number 2 as we trade. In a swing trade trend reversal, we want to identify the trend direction from the previous day. We'll wait for a move away from the open, again looking for either a swing high or swing low. And again, in a downtrend, we're going to look for a lower swing high than the previous swing high to confirm a downtrend. In an uptrend, we're going to look for a swing low that is higher than the previous swing low to confirm an uptrend. We're going to look for a test of the open of the day or other level. And if the open of the day or level holds, wait for a reversal signal. In a downtrend, the inability to break the previous low followed by a higher low and higher high is a reversal signal. In an uptrend, the inability for the market to break the previous high followed by a lower high and lower low is a reversal signal. On a confirmed reversal, look for retrace to the daily midpoint. Trade a break of the daily midpoint and target the next bank trader strategy levels. Look to trade long on a break above the daily midpoint and targets at inside range high, yesterday's high, and high target number 1. Look for a short trade when the market breaks the daily midpoint and trades lower with a target down to inside range low, yesterday's low, and low target number 1. This is an example of a trend reversal swing trade. As we see from the open of the day, the market makes a move down into the buy zone and takes a bounce up. Since we're below the open of the day, be careful that the market may not trade back above the open of the day. In this case, the market makes a move to the open of the day, but the open of the day is as high as the market gets, thus making a lower swing high than the previous swing high. This gives us the potential for a down move. The market trades below the open of the day, back into the buy zone, and then finally drops below the inside range and comes down to the daily midpoint. The market cannot break the open of the day and makes a lower high followed by a lower low and reverses all the way down to the daily midpoint. On the break of the daily midpoint, you can look to trade to the inside range low, into the sell zone and the bottom of the sell zone, and potentially on down to yesterday's low. Just be mindful that in a reversal situation, the market could just be doing a retracement for profit taking. A true reversal is a shift in market direction, whereas a retracement is just profit taking in the market. This concludes this training video about the swing trade style when using the bank trader strategy. This is Dean Malone with Compass FX. Make it a great day and get some good trades.